Alrighty, welcome back, Alpha Hunters. The markets are closed for the week of December the 13th. And we didn't really have crazy bearishness this week. It was just kind of more of a resting pullback week compared to the two previous weeks that we've kind of had. And we did get some data this week, with some of that data being around inflation. So, yes, we did get core inflation rate year over year came in at 3.3%, which was flat to forecast and prior. And then we also got total inflation rate came in at 2.7%. Forecast was expecting 2.7%. Prior was at 2.6%. So a little bit higher there on the total inflation. As far as PPI that we got Thursday morning, core PPI came in at 3.4%. Forecast 3.2. Prior was 3.4. So flat, but they were expecting a drop there. And then total PPI year over year was 3%. They were expecting 2.6%. Prior was also 2.6%. So they were expecting that to be flat, but it actually did rise. There you go. Initial jobless claims came in at 242K. Forecast was expecting 220K, and prior was 225K. So they were expecting a drop, but we actually jumped pretty good amount. Not a great variance number. As far as how the market kind of traded this week, pretty much a flat open there Monday, and it just kind of steadily pulled back all the way into close, kind of a little sideways there the first or middle part of the day there on Monday. Tuesday, a little bit of a higher open, and then it just kind of rolled over. Wednesday, we had a nice little gap up and just slingshot it higher there the first half of the day, and then the second half of the day kind of steadily came back down a little bit. Thursday, nice little gap down, just kind of choppy there the first half of the day. Second half of the day, a little bit bearish there. Friday, nice gap up, and then traded down very sharply there in the first hour and a half or so. Nice little trident base here, going into the middle part of the day, trying to bounce there. Second half of the day, just kind of more flat, more than anything else there towards the end of the day. So there you go. It was one of definitely some pretty good rotation going on almost every day throughout the week. As far as sector rotation for the week, we did have discretionaries leading the charge. Communications, staples outperforming. Tech underperforming there a little bit. Financials, energies, industrials, real estate, healthcare, utilities, and materials there at the lower end of the day, or lower end of the week. As for the VIX this week, we definitely, bounced off of last week's kind of lower close there on Friday last week. So we made a little bit of a higher move. Nothing crazy. So it was just kind of flat. It was just kind of mellow. Not really too much kind of going on there with the VIX. Dollar was strong this week. Came out. And that was kind of one thing that we were talking about last week, was this going to be the shoulder, possible move lower, but this could also be an ABC correction. Now we go higher. Right now it looks like it was an ABC definitely, or going higher. So looking pretty good. Probably just continuing to go higher there on the dollar. And the GLD actually dropped off there pretty good there Thursday, Friday. It's kind of been interesting, past several months. There's been a lot of days where the dollar and gold have actually traded in the same direction, which is not normal historically, until we got to Thursday, Friday, and then you see the gold actually dropped off pretty good. Yeah, I still like being bullish on any kind of dips or buying dips. I'm not trying to trade this bearish in any way. I'm not trying to trade it leveraged. I would just be picking up positions on some pretty good pullbacks. Unless we get to some lower levels or break through some of the lower, longer term 100, 200 type moving average, then we can really talk about some different scenarios there. 10-year yields were crushing this week, and yeah, I mean they were up good, and they crushed bond prices pretty much throughout the whole week. So there you go. 10 and 2 inversion bounced off the zero line and has moved back higher. I would imagine this is now going to be, moving higher. So basically what that means is the yield curve is going to be steepening the longer out you go. So I would imagine this is just going to continue to move higher. I think we've consolidated around the zero line enough. I mean, this has been a few months, typically last few months once you reinvert historically. So probably just going to be moving higher. HYG, high yield corporate bonds, dropped off pretty good there Thursday, Friday. What we were kind of talking about early in the week on the live stream was it lost momentum. And it was very apparent there Monday that it was on shaky ground. And I think Tuesday it was just like, yeah, it's losing momentum. And then Wednesday, you kind of got a nice little gap up, kind of held strong, but I think it was just one of those days where it's like, oh yeah, you can take this opportunity to probably just go and rotate out. But we got a decent gap down there Thursday, Friday, continuing to break down. So with how strong, we just saw yields, bonds might be in a really bad spot. But one of the things that we've been talking about here is being bullish on the HYG, but bearish on the LQD or the TLT, and doing like a pair trade that way, just because the HYG has been holding up very nicely, especially since the second half of September, while the LQD and TLT have been breaking down pretty good. You can see LQD broke down very hard this week, and they had a pretty good run there, kind of in that Thanksgiving week, the week after Thanksgiving, but the TLT even just did not hold up, man. That was just the retest that kind of we were looking for back in kind of late October, looking for a little bit of a higher retest and a rollover. And I think that was basically it. And it rolled over pretty hard this week. Take a look here at AVGO. I don't really take a look at stocks specifically so much on the weekend outlook. And a big reason that I'm bringing this one up, though, is mostly because they had earnings Thursday after the bell. They were up very nicely there on Friday. They were up 24% there on the close. And one of the things that they had said, the executive team had said when they put out their notes about earnings, was they expect, and that's a key word, they expect increase in AI chip demand going forward. Now, the reason why I say that is rather important to note is that is not what we saw from NVIDIA a year and a half ago when NVIDIA sparked its run and went on its run. NVIDIA came, when they did their earnings, they were like, yeah, we have huge sales this quarter and we have huge growth going forward. We're seeing huge demand. And that was a big difference, right? Like NVIDIA came out and they said, hey, this is the proof is in the pudding right here. Boom. And that is not the case with AVGO. You can go look at their revenue, their expected growth forecast, revenue, all that kind of stuff. It does not match what NVIDIA was doing last year. And I'm not saying that you're going to go bearish on that. I'm just saying I would be very careful on chasing something like that when it's kind of a very much a hype area right now in the market. And I think it was very negligent for executives to come out and say what they said and how they said it, and it's not really one that I would want to be a part of. And I'm definitely not saying be bearish, but I think if you're in this and you got something like that, and you got a pop off of they expect huge growth in the AI area, and you got a huge bump from that, I would take the profits. I would. All right, back to the regular schedule program. The RSP equal weight SP 500. Nice little pullback over the past 2 weeks. 10 red days in a row. My goodness. Yeah. Well, I guess not every day's been negative. We did have a pretty good gap up this past Wednesday. We didn't quite get negative there that day, but we've been selling down from open 10 days in a row, and the volume is dying off. We've just kind of been pulling back. So I'm kind of thinking that this is just a pullback, and to be pretty honest, if this is like a sell-off from the top of the market, this would be one of the crazier looking tops I probably would have ever seen. But I think you're probably just going to stay bullish. Honestly, I don't see any reason to probably give it up. And yeah, even I'm kind of surprised, like 10 days in a row just selling down every day on the RSP. So it's just kind of crazy. DIA, yep, also pulling back pretty good. This thing is also struggling a little bit from UNH. Kind of all know what's kind of going on with that CEO killing type situation. So kind of struggle busting there a little bit with UNH stock dropping as much as it has been. IWM has also been pulling back pretty significantly. I like the RSP. I like the IWM. I think these are just great areas to be getting in on the pullbacks. They had some pretty big breakout moments there in November. I think you're just still dip buying in these areas. I think the market's kind of giving you plenty of time to assess what's going on and get in. Like we've had multiple days where it's just like, oh, this is easy to kind of get in right now. Qs. Yeah, Qs has been a little bit hot this past 2 weeks. A lot of it's been hype from the new administration officials possibly get nominated into certain positions. You get some tech earnings this week, different things like that. This is not exactly an area I want to be so much. I think there's better opportunities, going to be better opportunities out there, less risky opportunities. You still see some people saying, yeah, that AI spending is just absolutely crazy. And it is. There are great companies out there in the tech space, but a lot of those companies are now, they've ran pretty strong, like NVIDIA, like it's ran very strong. AVGO, AMD, stuff like that, stuff that are providing the chips for AI, utility kind of stocks that are, providing the power for AI. The software side is not really seeing the benefit, and that's where a lot of the tech is, has a lot of weighting. Is more on the software side, and that's just kind of where I'm at pause. I'm like, okay, there's better areas, not really so much the Qs. And the SPY, yeah, I mean, it just kind of flat this week. Didn't really do a whole lot. Kind of just a very mellow sideways kind of pullback into the moving averages. Looks okay. Guys, second half of December is usually typically bullish. I don't expect anything different. Usually you come out of Thanksgiving, or Thanksgiving week is bullish. Usually the week after Thanksgiving or the second week after Thanksgiving is a little bit of a bearish, a little bit of a negative week, and then you have the end of year run. I think we just bullish the first week of December. We just had the little pullback, a little sideways action. I think we'll probably continue to grind higher. Not going to say we're going to go rip higher like 10% over the next few weeks or anything, but I would expect probably just some sideways action and probably just slow grind higher as we go into next year. Other than that, yeah, I don't expect anything crazy on the markets, and there's no reason for people to be selling right now. If people are going to sell, they're not going to sell it before the new year. So don't worry about any kind of major bearishness. Now, I'm not talking about specific stocks, but big reason why is people are not going to want to pay taxes on any kind of gains or losses or anything like that until we get to, April, right? I mean, they don't want to have to pay taxes on that stuff now. They can wait 2 weeks, and is the market going to be really any significantly different than where we are now? Most likely not. I wouldn't expect to see any kind of major selling until we got to like next year. Alpha hunters, have a great rest of your weekend and take care.